Hi traders, hope this finds you well. I just want to bring to your attention a gold setup for shorts. We discussed this in the Market Insider last week for this setup on the weekly time frame, and lo and behold, we do have the close of an inside bar as of last week, and the high and low of this inside bar has been breached this week. And the fact of the matter is with gold, it does look quite bearish. You had the completion of a free wave formation into this dynamic level of resistance here, being the 50 moving average. We've had the test here previously in May this year, and we've had the second test. Notice we haven't had the close above it. Furthermore, gold is still in a downward trend, and no matter what any of the pundits out there or speculators say, we've got the 200 above the 50 and the 50 above the 20. We're still making lower highs and lower lows. Please do not confuse this higher low here in terms of price as a reversal. I know a number of you have asked about this. What I want to simply bring to your attention is it's an ABCD pattern, and whenever you get a free wave pattern completing itself in a previously tested level of resistance, whether it's a horizontal level, a trend line, dare I say, or indeed a dynamic level of resistance like a moving average, that is a good cue to potentially sell. And last week the inside bar was a potential launch pad. I just want to talk to you a little bit about the ABCD pattern, where we've got three legs. We've got A to B, C to D, and generally we've got equidistance between the two. Okay, so this length here is going to equal this length here as well. So here we go. I'm just going to draw from this swing low this line here just to make it obvious to you. So you've got A to B. We've got the wave here, the retracement. We copy this like so, and you can see here that it completes. We've got equidistance between the two, and that's quite powerful. Like I said to you before, it completes in this area here where we've got this dynamic level of resistance. Last week closed as an inside bar, so the idea was to simply place an order below the low of last week's low, with a stop loss above the previous week's high up here, or above last week's high, like so. And the previous swing low here could be a decent target for this. It's an easy 3-to-1 here if you're targeting the previous swing low for a higher probability, lower reward trade outcome. I know a number of you will probably look to scale out of your positions in advance of this level and leave half the position running in anticipation of a new low low.
So with our gold short, we were triggered into the trade, and after 1 week we were able to really be in a position where we could move our stop loss to break even. After 2 weeks, we're inching close to our first target being the previous swing low here, formed in July 2015. So with the 2-bar trail technique, we were trailing above the high of every second seller bar, so we're able to at least move our stop loss to break even, but in this case we're able to move it to the high of this bar in the second week. And then we hit our first profit target. That enabled us to buy back half the position, and we were then angling for a new lower low, for a higher reward, lower probability trade outcome. After all, we have been making lower highs and lower lows consistently here with gold, but of course we want to lock in profits and take money off the table routinely, just in case it doesn't happen. After all, nothing is guaranteed in the markets. So we're trading our stop loss for every second seller bar above the high plus spread plus an additional pip. So then we're able to do it again at the high of this doji bar, just formed mid-November, and then we had another seller week, and then eventually we got stopped out here with the remaining half portion taking off the table. Okay, so we didn't quite bank at the new lower low, unfortunately. However, we're able to bank 6%, making a decent gain on our trading account. This trade took about 3 minutes to spot and to place. It took about 7 to 8 weeks to play. However, that's not a bad return for the effort spent actually placing and managing the trade.